Welcome to BPM's IPO Readiness Roadmap, a series of conversations with our experts who have been there and done that when it comes to helping companies determine whether to go public or look at possibly another liquidity option. I'm John Weems, Head of Business Development at BPM, a top 50 U.S. accounting and consulting firm. Today, we are focused on vital topics on the road to IPO or any other path, valuation and technical accounting, IPO readiness overall. Our experts today are Kemp Moyer, leader of BPM's valuation team, and Will Tanem, head of the technical accounting group. Welcome today, gentlemen.
Thanks for having us.
So in addition to being skilled within their respective specialties, Kemp brings experience as a varsity high school football coach. And Will is an avid surfer who has traveled the globe, as you can tell by his background. That is not superimposed. That's a real background. Something both have in common is the importance of preparation and the foresight to achieve a goal, whether that is a multi-billion valuation or another liquidity event. So since you have both already helped clients achieve and reach their goal of going public, and I know you're working with others and are in the trenches right now, let's start our conversation at the day of the IPO. Talk a little about some of the characteristics that helped your clients reach that day successfully. And Kemp, let's start with you on the valuation side.
Football IPO is like game day, right? But you don't just show up on game day kind of ready to go. It's all about preparation. So similarly within the IPO or SPAC process, it's going to be critical, not that you're ready the day of. Yes, you need to be ready the day of, but it's going to be critical to be prepared in advance. Have your processes in order, have your key partnerships and relationships that have been there, done that, understand the pitfalls, understand the challenges, and have gotten through the review stages that are required to get to that exciting, successful day.
To Kemp's point, it's all about preparation, and the companies that are most successful, they have a lot of things dialed in before they even engage a consultant. A lot of those things have to do with preparing GAAP financial statements regularly in a scrutinized environment like a Big Four audit or another firm audit. The more you can get through those audits, those tough transactions quicker, the more prepared you will be when it comes time to do the more pressing items. The more that companies have buttoned up before even engaging in the conversation to do an IPO or even a SPAC transaction, the better off they'll be, because there's going to be a lot of work down the road. And the more they can focus on the IPO and the SPAC transaction, as opposed to getting through an audit, the better off the company will be.
Kemp, how about you? I know you would be engaged multiple times along the way. When is the right time to get started, ideally?
Any time is a good time, but certainly once you do, as Will mentioned there, once you do get to the point of having a, high profile audit and are just kind of going through that review process, having eyes on your work product, we're going to help you make that process efficient, help you set up processes, and also to a sense of comfort from your audit group that you're working with the right people that are going to create additional legitimacy for what you're doing. If you're just kind of going the low cost route or don't have those hands-on professionals that have been there and done that, you're going to set up kind of habits that might be more challenging as you get into a higher leverage review situation.
As we learned from our colleague Michael Vanderklut last week, we know there are many moving parts, many advisors and other folks involved. Will, can you comment a little bit on the process from the management, drafting, readiness? Just kind of walk us through some of the ways that you and your team will be involved and help ensure that all those moving parts are coordinated.
The biggest thing that happens once things get in motion and you have the board meeting where it's all hands on deck, IPO, bandwidth becomes a real issue. So the people in finance, the controller, the CFO, they're going to have a lot of requests coming from us as the advisor, from people doing due diligence, from the external auditor, from securities counsel. And so it's a lot to really juggle and manage. That's one area where companies you typically benefit from bringing on consultants to help with the IPO management process. And so that's where we'll come in and we know how to relate to the various different parties when it comes to putting together the SEC draft, version control, getting it to the printers. That's one attribute that a lot of companies don't really think about, that they're just not going to have the people in-house to really manage that process. And it's not something that you typically hire for. Definitely temporary in nature. You don't really need IPO process management once you go public. And so we tend to fill that niche pretty well. And then the other aspect is drafting the statement. So the SEC filings, whether it's an IPO, an S1, or if you're going the SPAC route and you need to file a Super 8K, the drafting is pretty similar with those. And so a lot of the technicalities that you do not face as a private company come to light as a public company. So you really need to uplift all the disclosures that you have in your financial statements. And so we typically would help a company through that process if they don't have an SEC management function in-house. IPO readiness can start very early. And so what that really focuses on is how fast can we close the quarters and be GAAP compliant. And so the quicker that we can get a company to close their quarters and become GAAP compliant, the quicker they will be ready to start financial reporting on a quarterly basis once they go public.
Evaluation is, more than a one-time 409A, right? You talk us a little bit through some of the steps and nuances there.
Absolutely. And I mean, certainly, earlier stage when that liquidity event is, on a more distant horizon, you can kind of have that annual 409A cadence. But as you get closer to a liquidity event, and particularly a public liquidity event, IPO or SPAC, that cadence is going to be expected to ramp up. And that's both from the IRS side. 409A is kind of a hybrid reporting deliverable where you have an IRS component and you also have the financial reporting component. The closer you get to the IPO is going to help with executing both ends of that. And one benefit that we have here at BPM is we have experts kind of on both sides. So my group can work collaboratively with Will's team, collaboratively with the corporate tax team, the personal tax team. We have all those components that, again, can be something that does differentiate us from maybe a commodity valuation provider. We can do a bunch of that. And like Will said, the bandwidth in-house is going to be very tight for many of these companies that are ramping to 409A. So we can take some of that off the plate and work collaboratively as one provider. So our ability to collaborate on the back end makes our clients' lives easier as they're going through this challenging process.
And in addition to the 409A, a lot of the things that will come up through our review doing technical accounting, we might find derivatives from convertible notes. There might be warrant liabilities that need to be valued. And so it's really important that valuation and technical accounting are kind of cohesive in this process, as there might be annual valuations before you prepare to go public. But once you start to go public, you really need to do, in addition to the 409A, all these other financial reporting valuations on a quarterly basis.
And also things such as helping with the management disclosure letter, dealing with SEC commentary, et cetera. We'll be able to provide that while working collaboratively with teams that will take it another mile or several miles. So it can help our clients with a smooth transition to the public markets.
Now, have you had instances where clients, after working with you, kind of going through some of the steps, decided to remain private, do additional capital raises? And how did some of your work, prepare them to make that decision?
To become a public company, you're going to have the highest reporting requirements there are. So if you're going IPO track, but still kind of learning and understanding the market from the M&A side, there can be a two-track situation set up, and BPM has a capability to help our clients through IPO or through prepping for an M&A event. Clients may go IPO route, but switch gears and find a buyer on the M&A side. Right now, definitely the public markets are very hot, but those things ebb and flow, and being prepared for whatever exit scenario the board or ownership is interested in executing will simply open up the possibilities and make for a more likely end game scenario.
You don't want financial reporting to be the holdup in the process, because that's missed opportunity, that's higher costs down the road, and a lot of other issues that could come of that. So the more you have financial reporting dialed in before any of these conversations happen, you're able to be flexible with whatever option is the best option for you at that specific time. And if public or through IPO or SPAC isn't the right avenue for the company, it's not all a lost cause, because to get a preferred equity financing, something along those lines, it's always good to have really good GAAP financial statements, because you never know what's going to happen in the future.
Well, Kemp, Will, thank you very much for joining us today. We invite our listeners to connect with you via LinkedIn. I know that both of you are happy to have conversations with business leaders who are working to make these decisions. So we appreciate that. I would be honored to provide a complimentary IPO readiness assessment for you who are listening. And stay tuned for upcoming episodes. We're always happy to answer your questions along the way. Thank you for your time.